Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm gonna do a fundamental valuation of Southwest Airlines Co. Okay, ticker symbol LUV. This is in terms of balance sheet probably the best of the four top airlines in US. Okay, this is the most let's say financially stable. So we are gonna do a fundamental valuation of it, and I already did a fundamental valuation on Boeing and on Delta Airlines. Okay, so go to check it out, those videos, if you haven't already. And leave me a like if you find this video interesting and subscribe to the channel. And let's begin. Alright guys, so Southwest Airlines. Here looks like in the pre-market today we are having a bounce back. Okay, it's been 2 or 3 days in a row of red market, and now we are having a huge bounce back. This market is so volatile in those days, okay? But don't panic, okay? Because let's also take a look at other airlines, so like American Airlines. Here as well, another bounce. And Delta, let's see Delta, another bounce. Look at that, we are going near $30 again, okay? So let's take a look at the price action of Southwest Airlines. Here we were trading around $58 before this pandemic, and we went down to hit a low of $22 per share, okay? We bounced them back around 42. Okay, that's incredible. And right now we are trading around 32. Okay, but now the price is in the pre-market is around 35. Okay. Anyway, I would say that even if those previous 3 days had been red, here we had a nice bounce back. Okay, because now everyone looks like they are panicking and things like that, but let's not forget that these airlines here made 88%, and right now we are still up almost 50%, okay, because today the price is around here. So a nice bounce back, okay. The market cannot go up in the straight line forever. Those kind of retracements here are actually normal, okay. It's not an elevator that go up boom like a rocket, okay. That's it. And the market is always going in waves. Anyway, let's take a look at the valuation right now. Before, as always, let's do a summary of the balance sheet. Okay, now if you want to have a comparison between the four main airlines in US, I did a video back then where I compare the four of them. So Delta, American, United Airlines, and Southwest Airlines. Okay, go to check it out. That. Let's do a summary here. What we have for Southwest Airlines. We have total current assets that are 7.02 and liabilities 10.2 billion. Okay, the current ratio is below 1, it's 0.7, and it is actually the highest current ratio between the four main airlines. Okay, so total assets and total liabilities, we have a total ratio here of 1.51. Okay, so that's pretty positive. It's the highest one as well in the airlines industry. And the debt to equity ratio, which is not too bad, okay, is below 100%. 70% foreign airlines in US is very, very, very great, okay. If you do a comparison, it's great because what we have here, yeah, let's see, look at that. For American, we cannot even calculated because actually the equity of American Airlines is negative, and this is Delta and this is United. Okay, so 70%, 69.96% is great. Okay, it's great. Anyway, what we have next, the market capitalization today is 19.35 billions. That gives us a book to value of 2.13. Okay, when we take a look at revenues and earnings, we see that in the last 4 to 5 years the revenues have increased constant way, okay, around 2, 3, 4% every year. And earnings are a little bit of roller coaster because usually the industry has a lot of costs, capital expenditures, which are not constant, okay, depending on which year you are. Anyway, now let's go with our valuation. When it comes to, in this case, I took the last 5 years data. Okay, now we are gonna try to understand ratios, and we are gonna try to forecast the next 5 years. Okay, when it comes to revenues, let's see, for a Southwest Airlines, we started in 2015 with 90.82 billions in revenues. Okay, so 19 below 20, and we went up to 20, 21.17, 21.9, 22.42. Okay, so a constant growth. This is kind of positive, okay? Around 365, 375 to around 3% every year. Now, for the airlines industry, you cannot expect 25% every year, okay? Because that's what it is. Now, when it comes to net income, historically, we have those kind of things, okay? So what we care is the ratio, okay? Is the ratio, the net income margins. And those are the margins which are, as we can see here, they have been a little bit higher, but overall they are pretty stable. And when we do an average of those things, we get 12%, okay? We can expect around 12% in net income margins. And now we are going to see the free cash flows to equity. So as always, what we do, we go back in the previous report and we check and we take the cash flows from operating activities that are here and we deduct capital expenditures. Okay, so we get free cash flows to equity, and those are the numbers we need. Now, another ratio which is important for us is the ratio given by the free cash flows divided by the net income to understand how much of net income becomes free cash flows to equity, okay? So when we do the ratios, we get those percentages. We take an average of all those things and we get 88%, okay? Simply meaning that 88% of net income becomes free cash flows to equity, okay? Now we have what we need. And now we can go to actually try to forecast the next 5 years. Now, 2020 and 2021 are given by analysts' estimates, okay? So 2020, we all know is going to be bad, and analysts are predicting a minus 52% in revenues, okay? So 10.75 billion for Southwest Airlines in 2020. When it comes to 2021, there is going to be a bounce back, okay, predicted by analysts in revenues. Bounce back around 68%, coming back at an around 18 billion in sales and revenues in 2021, okay, so below 2015 data, okay. Anyway, a bounce back from this pandemic thing. And here it comes our scenario analysis, because the next 3 years, 22, 23, and 24, we have to put a growth rate, okay? And as always, when it comes to put a rate, we don't put just one rate, but we put many of them to see how things change, okay? So we start with a 6% growth rate, and we are going until 10% growth rate, okay? So those are all the scenarios that we are going through. Now, just to make you understand what that means, is that with a 6% growth rate, meaning that the revenues are going to grow from here to here 6%, and again 6%, and again 6%. Coming in 2024 with 21.54 billion in revenues, and that is below actually the 2019 revenues, okay? So with this first scenario, even in 2024, Southwest Airlines is not going to make the same revenues as we were making before, okay? So that's what it is. And going up, I'm going to show you what it means at 10%. At 10% means that in 2024, Southwest Airlines is gonna make more that they were making before. Okay, so here we can see it's a growth that it's a little bit faster. Okay, coming back to previous levels and past them. Okay, do better than the past in 2024. Okay, so that's what it is. Now, as always, we have our ratios. So these revenues multiplied by 12%, we get the net incomes. And when you get the net incomes, we multiply them by 88%, and we get the estimates of free cash flows to equity. Okay, so that's what it is. Now, for 2020, in all the scenarios, is forecasted a loss of 2.25 billions. Okay, so because it's really bad. 2021 again is fixed at 1.9 billion in free cash flows to equity. Okay, the other three are changing depending on the scenario. So let's see what we have. We start with a 6%, and the rate of return for Southwest Airlines, I put 11%. Okay, why? Because it's kind of a risky industry with some debt that it's not living a great moment. The beta of Southwest Airlines, it's around 1.3. So I think that for this environment, 11% is a nice rate to discount for. Okay, perpetual growth. I'm gonna use always for all the scenarios. I'm gonna use both 3% and 3.50%. Okay, so for all of them. So that's it. That's all requirements. And let's see what we have. Okay, now we start with the 6% scenario. And when it comes to that, we have a today's company valuation of 22.32 billions divided by the total amount of shares outstanding, which are 589 million. We get a fair value, fair price of $37.88 per share. Okay, when we go to increase the perpetual growth, we have a fair price of $40.12 per share for Southwest Airlines. Now let's increase the growth rate, 7% scenario. Again, 3 and 3% as a perpetual growth. What we have with the 3% perpetual growth, we have a today's company valuation of 22.93. And when it comes to a fair price, $38.91 per share. Okay, 3.50. We have today's company valuation of 24.28 billions and a fair price of $41.21 per share. Great. Now let's increase the scenario 8%. Okay, 8%. Here the same 3 and 350. Today's company valuation 23.55 divided by the total amount of shares outstanding, we get a fair price of 39.97 for Southwest. Okay, with the 8% growth. 3.50 we get fair price of $42.34 per share. Okay, now 9%. With a 9%, we get a today's company valuation of 24.18 billions. Okay, when it comes to the fair price, we are $41.03 per share. By increasing the perpetual growth to 350, we get a fair price of $43.46 per share. Okay, perfect. Now the last scenario. Okay, the last scenario. Perpetual growth 3%. We have a today's company valuation of 24.82 billions divided by the total amount of shares outstanding. That gives us a fair price of Southwest Airlines today of $42.12 per share. Okay, by increasing the perpetual growth, the same stuff, but this time we have $44.62 per share. Okay, perfect. Now, as always, we have 10 prices, and we are gonna take an average of those prices. Okay, And this average gives us at today company fair price for Southwest Airlines of $41.17. Okay, we want to take a 20% range, and we get a range of between $32.93 per share and $41.17. Okay, so this is the result of our valuation. $41.17 per share is a fair price for Southwest Airlines. Now, as always, we take a range, okay, to have a higher probability to be right. When it comes to statistics, the single number has a probability of 0, okay? So that's why we take a range. When it comes to see the price in the market, we realize that is now trading around $35 per share, okay? So what does it mean? This analysis meaning that right now it's trading basically at fair price, okay? It's inside the range. In fact, if we go here, we see near the fair value. And what does it mean? Meaning that if you want to buy today Southwest Airlines, well, let's say you are paying the right price, okay? Actually, you are buying it a little bit undervalued, okay? Because according to my analysis, the result here is $41.17, okay? So that's what this means. You're not buying something super overvalued, okay? It's a nice price to get for Southwest if you believe in the future. That's what this analysis is telling you. Now, before we end, I want to show you another very important document. Let's see what we have here. This is our best friend, as I told you, in terms of airlines, okay? The TSA checkpoint travel numbers. And we can see that we have hit 400,000 passengers per day in the previous days, okay? And now we are stable above 330, okay, thousand passengers per day. And this is very, very, very positive that those numbers are gonna continue to increase for the airlines industry, okay? I explained to you why in the previous video, in that video here. So go to check it out. And that's why the market is actually going up with airlines, okay? It's going up simply because those numbers are going up, okay? Just to make a comparison, here was the height of the pandemic, okay? Below 100,000 passengers per day. And right now we hit, for example, here 441,000, okay? So comparing to 80,000, it's a lot more, okay? So that's it, guys. That's the end of the video. I hope you find this video interesting, and leave me a like if you find this video interesting. Subscribe to the channel, leave me a comment below. Tell me if you own Southwest Airlines, if you're planning to buy some, or if you own other airline stocks, okay? So thank you for watching and have a wonderful day.